I lost a lot of money in this recent crash in the market, and not a little, a substantial amount. And if you're in the market right now in crypto investing, you are probably feeling it as well. And when it's a bull run, it makes it feel easy. It makes it feel like everybody can win, and it makes it feel like every project will do very well. But every time that I see downturns, like the recent downturn in the market that's going on, it always brings me back to three really important lessons that I've learned over the last few years when it's down in the market. The first one is that position matters. The second one is that no matter how experienced you are in the market, you're always going to feel the emotions of the ups and the downs as well. Sometimes more, sometimes less. And finally, I also learned the third point is that the market is always an opportunity when it's red, right? You hear it time and again that now is the time to invest. When the markets are red, it's time to buy. And it just sounds really easy, to be honest. It sounds like it's a piece of cake to remember these things. But being in the market, if I've learned one thing, it's that it's extremely challenging because of how volatile, because how ever-changing it is, and because just how many things are moving in many directions when you're an investor. And when you come in as an investor, nobody tells you this, right? Nobody tells you about the ups and downs. You think that the hardest thing is losing money, but really the hardest thing in the market is surviving. So the first thing that I've learned, like I mentioned, is that positions matter in the market. Depending on the size of positions that you have in each of the assets that you've invested, that's going to determine a lot in terms of what you're going to be hurting in terms of a red market. So if you're losing money, that's going to determine, especially if you're in crypto or especially if you're in micro caps. So that's why I've talked about before about really positioning yourself in the solid assets first, with bigger positions and smaller positions in the more risky assets. And that's a structure that I've talked about, and it's because it's a pretty conservative. Now, you might disagree with me. You might think that, hey, I'm here to gamble a little bit more because I want to make more money a little bit faster. That's more power to you. That's as long as you understand your positions, and as long as you understand what you're investing and how much you're willing to risk, then the emotions are not going to play as hard with you when the market goes down. Speaking of emotions, I think that emotions are going to be impacted for anybody. That's the second thing that I've learned in the last few years in the market, especially when the market is down, that you're going to feel the emotions really, really strongly, right? It doesn't matter if you're experienced, like I said, you're going to feel them probably less because you've been through it many times. And if you're new in the market, that's when it really gets you. Some investors will go all in on one token, on one or two projects, and then the project will go down 10%, 15%, and they're hurting, right? They'll pull their liquidity, they'll pull their money, and then they'll rotate it to something else, and they'll do it again and again and again, especially when the market crashes like it has been going down over the last few months. They'll just be devastated and they'll lose everything. In some cases, that might even lose their leverage, right? They might even get liquidated because they were leveraged too heavily. So it's really important to really understand your emotions. And it's just like anything in life and other aspects of life. If you're too emotional, you're going to make decisions that are not rational, right? When you control your emotions, when you think about your emotions and just look at yourself internally and how you're feeling, then you're going to make more solid decisions. You're going to make more calm decisions that are going to make you more money in the long run. Because if you're over rotating because of your emotions, because you're feeling like you're down, because you're chasing candles, or because you're chasing the next narrative, or because you're trying to avoid to lose money, then that's when you get hurt. But remember, it doesn't matter if you're a very experienced investor or if you're not that experienced at all. Your emotions are going to be pulled in many directions. So you have to be ready for that. You have to be ready for those emotional tugs, those emotional pulls that the market is going to be having an effect on you. And finally, guys, the last one, and I think it's the most important one, and the one that I'll leave you with because it's the one that hopefully will make you survive this bear market and this cycle as a whole, is that right now is the test. This is the test that you're facing. This is the test that you're going through. And it's all about survival. It's all about hanging in there. It's all about dollar cost averaging. If you have the liquidity, if you have the funds to do it, it's all about just finding those solid projects that you can continue to add and accumulate and compound in the long run. Because remember, the market is very cyclical, and eventually things are going to start turning around and things are going to start, heading in the right direction for you and for many other investors. And then it's also going to start feeling like everything is easy again. So that last one, I think it's the most important point. It's the one that I've learned the most from. It's the one that has made me be more resilient, has made me a better investor. Just understanding that, hey, yeah, you're going to lose money, and I've lost quite a bit of money, like I said, in this last pullback. But it's a long game. That's my philosophy in crypto. It's a long game. Some of you guys might be traders, right? Some of you might trade on an everyday basis and might be moving your capital here and there and moving it around. I don't. I trade for the long run. And for me, that's just one of the things that I think about when the market is red. That if I stay here, if I continue to dollar cost average and just add to the projects that I know are solid, Bitcoin, Ethereum, and other microcaps that I know that have a solid foundation, I expect to do very well when the cycle turns around and things start heading in the right direction. So in crypto, like I said, surviving in downturns, it's what's going to determine your opportunity to continue to participate in the cycles that are coming. And eventually, hopefully, you will make it, and we will make it. And you will be completely happy that you stuck around, that you worked through it, that you navigated the storm, and that you continued to support or to build your positions for the future. That's it, guys. Hopefully this chat was good for you. Hopefully you enjoyed it. I really enjoyed these conversations that we're having. Crypto without the noise. Let's get rid of the noise, guys. And hope you enjoyed some of the scenery here in beautiful San Diego, California. I'm Beto on bass. If you're new here, welcome. It's nice to meet you. And if you're back from a previous video, welcome back. I'll see you in the next one.
Better on base.